Welcome to Business Brief for today, 27th day of August 2026. It's a Thursday, and now the Central Bank of Nigeria has offered 700 billion naira in Treasury bills at its second and final auction for August, in another major operation to manage liquidity and raise short-term funding for the federal government. The offer was divided across three maturities, with 100 billion naira allocated to the 91-day bill, another 100 billion naira to the 182-day instrument, and 500 billion naira to the 364-day bill. The auction has also produced a fresh signal on borrowing cost, with the stop rate on the 364-day Treasury bill repriced to 17.15%. The outcome comes after strong investor demand at the previous August auction when subscriptions reached about 4.4 trillion naira against the 700 billion naira offer, while the one-year bill attracted the bulk of investor interest and its stop rate rose to 17.59%. The latest auction therefore gives the market another indication of how investors are positioning their funds amid tight monetary conditions. Treasury bills remain an important instrument for managing liquidity in the banking system, while providing banks, pension funds, institutional investors, and other market participants with short-term government securities. Strong demand can help the government raise funds, but elevated yields also mean higher borrowing costs and can make it more attractive for banks and investors to hold government securities rather than extend credit to businesses. The August 2026 auction is therefore being watched not only for its impact on government financing, but also for what it signals about liquidity, interest rates, and the direction of Nigeria's fixed income market. The Dangote Industries is moving to acquire its own shipping vessels to transport products from Nigeria to markets across West and Central Africa, as limited shipping capacity and rising road transport costs continue to constrain regional trade. The decision follows difficulties faced by the conglomerate in securing vessels for export, with the company revealing that it was unable to find a ship to move a 1,000 metric ton consignment from Nigeria to Ghana, despite the relatively short distance between the two countries. And the move also highlights a wider challenge for Nigerian exporters who continue to face transportation and logistics costs that can make locally produced goods less competitive in regional markets. Dangote's planned shipping capacity could improve the movement of cement and other products while creating opportunities for Nigerian seafarers and professionals in shipping and international trade. Now, this development comes as Nigeria seeks to expand non-oil exports and deepen regional trade, but the experience of one of its country's largest industrial groups shows that access to reliable and affordable maritime transport remains critical to achieving that goal. And now, Meta is agreeing to pay up to $18 billion over the next decade to settle claims brought by U.S. states accusing Facebook, Instagram of deliberately designing their platform to keep children and teenagers hooked. The settlement is bringing one of Meta's biggest legal battles to an end, while also requiring major changes to how young users access the platform. The agreement is covering claims that Meta misled users about the safety of its platform, exposed young people to harmful content, and improperly collected data from children. Meta is not admitting wrongdoing as part of the settlement, but the company is accepting significant restrictions on its services for teenagers. And under the agreement, Facebook and Instagram will introduce a 2-hour daily usage limit for teenagers, overnight restrictions between midnight and 6 a.m., and muted notification during school hours. Meta will also strengthen age verification, parental control, and protections around features such as visible likes and certain beauty filters. Now, the settlement is potentially significant for wider technology industry, as Meta is calling on platforms including TikTok and YouTube to adopt similar safeguards. For Meta, the agreement removes the immediate uncertainty of a major trial while creating substantial financial operational obligations. It also marks a major shift in how social media companies are being held accountable for the impact of their platforms on young users. And that's Business Brief for today.